All right, we back once again. Quick Gex video. We're going to be looking out into the future with gamma exposure. These are the closing levels. Remember, you want to make sure to get the updated open interest in the mornings at 6 a.m. Central. Run these at night and then compare them to the morning. But here's my essentially my basic plan at what I look at. I'm going to run through it really quick. If you have questions, please leave them in the comments so I know how to essentially follow up these type of videos with what people are looking at. Don't ask too complicated question. Just keep it real simple if you can. I know it's complicated, but if you want to know more, I'll leave a link in the description to the Discords where the folks that use this stuff all the time are residing, and they can answer questions there. They're more than happy to explain it. So all for free. So just make sure to leave a like and comment and subscribe and share these videos with folks so that they can also take advantage of it because it's a huge edge. Here's the closing picture for tomorrow, looking at essentially 41.25 being a huge level. That actually just broke in the futures market. So this is SPX, but they sort of correlate. But ES just broke 41.25 and it fell like 4 points instantly. So that's that put wall there that we're looking at. We're under the volatility trigger for the next three expiries. So if you're underneath these vol triggers, 41.80, 41.95, and then for tomorrow 41.90. That means the market maker is selling and shorting into weakness and then buying into strength, just in general. It doesn't mean it always works that way. It just means that's where you get the gyration. So if folks are buying, the market maker's buying with you. If they're selling, the market maker's also going to be selling into weakness. That means lows can be broken. That means lower levels are going to be explored a lot more often. Supports are going to be easily broken. Resistance more likely to hold in this type of environment. So that's why this window of weakness between now and the end of the month, essentially the week after the end of the month, which will be sort of a bullish week. Right now, we're just in this bearish window. So keeping that in mind, the next three expiries were all under these volatility triggers: 41.90, 41.95, 41.80. And then we've got big levels here, 40.50, really popping out here for Friday. I'm guessing that's probably going to be where the market's going to try and go into pin. If they can't hold 40.50, it's really just going to go right to 4,000. And as long as we stay below these levels, just know that the market makers and the market is essentially trying to whittle its way down to these lower levels, these big gamma levels. 41.25, a big expiry for tomorrow. It looks like they were building out 40.80. I feel like a weatherman here. They're building out 40.80 into tomorrow as well, so that might be a level to keep an eye out on for tomorrow. Does that confluence with going into Thursday, 4100 being a bigger level for Thursday? Don't see a lot of 40.80 being built up there for Thursday, so that's where I say, basically the 4100 level probably going to be where we end up tomorrow. 40.80, we'll see if they try to tag it. My guess is they tag it, bring it back to 4100, just because we see the 4100 here. 40.50 being a huge wall, so any buys into this 41.50 likely to be sold. That's the way I would play that. And then looking into Friday, we got the 40.50 sticking its head out, and then we also got the 4,000. Unlikely to see the 4,000. It is quite a bit low. The delta curve here really gets small here, and the odds of hitting these levels are really low. So if they can keep the market afloat, a lot of that gamma exposure is going to really start to shrink, start to go away, start to evaporate, really quickly on an exponential scale. So 40.50 very, very likely into Friday, in my opinion. So we're looking out that far. So now we're looking at the end of the month. Essentially, as far as we can look out for the month, we see some positive gamma, but not a lot. You see this big level here. All this gamma here has been essentially hedged out, and we even see negative gamma above us. That is what I've seen. That is very, very common in sort of a sell the rip type of market. When you see negative gamma above you in the call where call gex should be, that's a sign that you're sell the rip. Don't mess around trying to be a hero, essentially buying lows. But we see a lot of gamma here at 4100. This is another reason why I say 4100 likely to be the level for tomorrow and into Friday, because there's a lot of positive gamma there. So it needs to spend some time there, and this is even into the end of the month. So 4100, if that level breaks, 4090 is going to be your trigger for for a lot more downside, in my opinion. 4090 is like the last line of defense here on these volatility triggers, going all the way out. I mean, our main volatility trigger is 4190, but going all the way to the end of the month, that's the last one I see as the last line of defense before we go full negative gamma. So keep an eye on all that tomorrow. If you like this video, make sure to leave a like, please, and a subscribe and a comment, and then join the discords. Ask all the questions you want. You get these gamma charts for free. So I'm sitting here selling you something for free. So we'll see you next time. Peace.